All right, welcome back to another episode of our daily market reviews. Market is closed once again. Today is Thursday, and we are back to see how our levels are faring, how our trade ideas are being manifested, how price is treating us, right? So I have in front of me the dollar index quickly. So yesterday, this was higher time frame key level. We saw a bounce off of it during Wednesday's trading, and then we left this by the close of the day. We left this fair value gap or inefficiency level, and then during my review from yesterday, I said that I wanted to see price use this inefficiency level here as a continuation to the upper side, or once price break below it, we see the downside, right? So as the day is closed, honestly speaking, I still did not take any trade on the mergers. It wasn't so clear to me because the conditions are not so much favorable. On the H1, if we go into the day's trading, you could see that for the most part of the day, this level here that I was looking at was holding price. Price never really moved until late. Price never really moved until New York open when we saw a close below this one. I still wasn't too sure, and so I stayed out of the market for the majors. I rather had trade on GJ and then gold, which I would explain quite later. It was very simple to me, and so I went with those. Once these were not so clear to me, I decided not to go near them because the conditions were not too much clear to me. I mentioned that I was going to use the H1 and then the H4 and not so much of the lower time frames. And so the H4 was respecting my key level here. It was sort of bouncing off of it. And then later on, we saw a huge down candle closing below this level here, right? And now the day has closed and is also closing below the higher time frame key level that I marked off. So moving forward, and before I come to the trades explanations, moving forward tomorrow, hopefully I want to see this one being used as resistance for continuation to the downside. This low and that low, that low, this low, perhaps if there's a bunch of news on the calendar for the majors tomorrow. Yeah. And so there's news for Euro, there's news for GBP, there's news for the dollar. So let's see how it trades. Now on Euro USD, I'm noticing that we had SMT on the lows, on the highs here, and then here we are seeing that the low got taken, the previous day's low got taken, right? So how do I flip over here? This was the key level for me. This was the OB. We see price traded back in, and then it bullet hit here. So how do I flip? I can see that price is now creating and respecting bullish PDRs and then disrespecting the bearish ones, right? So all of the key levels that are supposed to hold price to continue to the downside are being disrespected, whilst the bullish ones that are being created are now being respected. It's as simple as that. So tomorrow, same, trade back in, and then finish it off. I do not know if price is going to expand due to the expansion here, but I know that this tier needs to go. at least the high of Tuesday can be the nearest target. Are there any other highs here? Yes. If there's any steam to it, these highs too can just go off, right? So let's see how the day traded on the H1. If I were in the chart, this was what I would have probably taken. As soon as this H1 closed very bullishly above this key level, I would have traded this from here, right? The low of this, the open high low close of this, and then my targets would have been this, and then subsequently that, right? But to be very honest with you, the majors was not my didn't have my attention so much because it wasn't so clear to me at all. The price action wasn't so clear to me, so I just decided to stay off of the majors. Right. Let's go to cable. So on the H1, see how cable. So this was what I was looking at. I said that if price can trade back to close below this level, if you remember, price can come back to close below this level, then I was going to flip and continue to the downside, but that never happened, and so I didn't see the need why I should engage the markets, right? So if I outline something and then I don't see it happening on the market or the live trade, I just pretend it didn't happen at all. I just pretend it didn't happen, right? So the way I was looking to trade it was this high taken. Then if there was going to be a close below this one, all right, so it's going to be like this downside, but that didn't happen, and so forget about it, right? But instead, price traded higher for this, closed way above this, and I still did not take any action on this one as well, right? Perhaps the trade I took yesterday would have now hit the target, which was the previous week's high that I was targeting, but it still didn't happen, and so that's it. That's about it, right? So now I'll just go to gold and then GBP to explain the trades I took. Very simple trades, very, very, very simple trades. Very, very simple trades. The trades were framed on the H1. We are seeing a continuous bullish movement this week on the on gold, and so yesterday, which was Wednesday, I anticipated a pullback because of price trading and closing below this level here. All right, so this was a failure swing, and then price closed below it. So I saw this move down, and then immediately what came to mind was this is just for stop runs, right? Price used this level here as resistance, and then also this one here. Okay, so this as resistance, okay, and then this inefficiency level here, if you can see, price came, respected that, came back for this low, and then disrespected that. Okay, so I marked out this hanging low here, and then I extended this inefficiency level, saying that if price comes to take out this in the induced low into this, and then I see a change in order flow on the lower time frames, I was going to go in. All right, I just wanted to be sure because all of this happening here is a huge consolidation, right? even though I wanted to long, the overall bias is long, I still needed more confirmation because gold is gold, right? So all of this were confirmation, all of this were consolidation, but I knew that we're probably going to use this inefficiency level as a key level to frame the trade. So let's go to the 15 minutes. So what happened was, so price comes and close this one. Price disrespects it and then goes into consolidation again. And then during I think New York, yeah, during New York, it was New York Open. Let me just, yeah, it was New York Open. That's when price actually came for. Oh, that closed that. Yeah. So this is the key level from the H1, and then during New York, price comes back to take out the induced low here, and then what do we see? Price begins to close above this level here, and then expands, right? Expands, leaving an inefficiency level here. So on the H1 again, oh sorry, was yeah. Right, as soon as I saw price coming back to this one that I framed as the OB, let me show you. So consolidation, price comes back to take the induced low, closed above this down closing candle here. So this is where I framed the block from, right? Also on the H1, I am getting a close above this down closing candle, confirming this as an order block, all right? And so the next open high-low close of the this opening candle, that's where I went in. So on the M15, this is the trade. So on the M15, this low to this high, and then this inefficiency level here, that's where I went in. And then where is my target? The previous days, these highs here, right? Those are the targets, these highs here. So I took this one on the live account. This one on my live account. So this was a very simple trade, right? And then also moving forward, what I was expecting was you see this level here that was holding price. I wanted to see that same level being used as an area to frame more longs, but that didn't happen. Right, that didn't happen. So I just held my longs, took partials here. I'll show you, and then ultimately, I think here this is where I went off for the day. So this is the trade. This is gold. This is funding pips. This is the trade where I took it, and then I took the partials on there. Right, first partial, and then secondly, yes, above this one. Right, so that's it. Now let me quickly go to GJ. So GJ was framed with the same idea, right? The yen has been very bullish. Go to the daily. Right, so here's it. Price sweeping the previous day's low. This was from Thursday or Wednesday yesterday, right? And then on the H1, what do we see? This is the low, and then on the H1 closed above this, all of these down candles, and then we leave this inefficiency level here. See this inefficiency level. As soon as price um closed above this inefficiency level, the retest of it, that's where I went in. Then I left my um stops here. So on the 15 minutes, you can see that that's it. Yeah, I'm using this one inefficiency level. As soon as price closes above it, comes back to, it's almost the same trade as what I took on the gold, right? So price comes back to retest it, you go in. My target was all the way previous week's low. Now what happened? Let me show you. I held this and then also I added more longs here. Added more longs here. Show you from the trade duties. Right, so this was the first, and then this was the I think the second. Yeah. So as soon as I took some partials, you can see that I took some partials on there because price was failing to close above this level for continuation. And then I moved stops, took partials, and then I moved my stops here below this low. So if price is failing to close above this level, you know that this is in danger, right? So let me go back to the charts. So this second trade I framed from the H1, and this is the range low, range high, inefficiency level, and then also the previous week's midpoint, right? That's the strong key level. Price has expanded from this consolidation here away from the consolidation and then came back. This is it, came back here. So I'll go to the M5, right? I'll go to the M5. You could see that we have an inefficiency level. As soon as we close above the inefficiency level, that's where I took the longs, right? That's why I took the second position. And then I took some partials off when I saw that price was consolidating above, almost failing to close above it, right? And then I moved stops to break even, and you can see that, right? I was no longer interested in charts again because I had had enough for the day. There was no point for me to be greedy. Otherwise, I would have come to check what price does after taking this low here, right? If I saw another bullish continuation, just as it happened here, closing above this one, that would have assured me because the overall sentiment is bullish for the Gbpjpy. So as soon as we take this low, I would wait. If I see the H1 turning bullish again, this would have been a very simple trade for me to continue to my targets. But I was no longer interested. I had had enough, and that was it. Right. So guys, that explains my activity for today. Now, the greatest takeaway here is you'd have to wait, right? Wait. That is where most of us do fail. The waiting, it is so very, very daunting. So if you don't have anything doing, just get off the chat, set your alarms. And once you see price come to your target where you are expecting price to bounce off of, go down to the lower time frame that aligns to whichever time frame you are looking at. If I see a level on the H1, I am using either the 15-minute or the M5 for confirmation. I want to see the M5 turn bullish if the level is framed from the H1, right? That is all I'm doing. Otherwise, I'm not doing anything. I am not, no triggers. I can just look at the charts and then I won't pull any triggers. It's better for me to save my mental capital as well as my trading capital for when there is very good opportunity. So that brings us to the end of today's video. If it's any helpful, kindly click the like button and share, subscribe for more. Thank you, and I'll see you. Thank you for your time.